All right, folks, today is Monday, August 24th, and this is the end of day review for the live trading room. We talk at the end of every day about performance for the adaptive entry system. We trade the adaptive entry system, and in the live trading room, we profile 5-minute charts using the NASDAQ 100 futures contracts. So we're trading that throughout the day. We use the NASDAQ 100 and the 5-minute chart to profile what the integrity, strength, and productivity of the adaptive entry system is. You can use it on any time frame that you prefer. We have some people in our live trading room that trade 3-minute charts. We have other people that trade longer term charts. You can also use it on stocks and certainly for options trading. But we try to keep it simple, just profiling exactly how the signals work, how to interpret the signals, answer questions about those signals, and then at the end of the day, we provide a summary of what that performance looked like. So here's today's summary. We mostly focus on 7 a.m. forward Eastern time. So this is starting at 7 a.m. and then I'll scroll down to the last trade that we recorded, which was at 3:40 p.m. So what I'm mostly interested in is then the daily summary. And there are two primary categories that we focus on, 9:30 to 12, taking all signals. There are 4 primary signals that we trade: the trend bias signal, the continuation signal, the consensus signal, and the momentum signal. And then we also focus on the 7 a.m. to 4 p.m. time period, where we only trade the trend bias signal and the continuation signal. So then what we do is we post our performance at the end of every day in the personal trading plan. And we do this as a reminder for all of you as to how important it is that you record your trading performance, that you have a tool like the personal trading plan that will calculate for you what your average run rate is and then project out for you a 12-month income. So we think that this is a really important part of trading successfully. So we're going to go down here to Monday, the 24th. We're going to go over to our data entry field, and we track the 2 categories that I mentioned. On this tab, we're tracking the 7 a.m. to 4 p.m., taking only the trend bias and continuation signals. And today, we scored 11.5 points. And on the NASDAQ 100 futures, each point is worth $20. So 11.5 times $20 is a $230 profit. But we are trading 3 contracts because the personal trading plan has scaled us up to 3 contracts. And I'll explain that in just a minute, how it does that. So $230 per contract times 3 is $690. And then we did 16 trades. So 16 trades times 3 contracts each is 48 contracts. So that takes into account our cost of doing business. So we have a net today of about 8.3 points and $498. A little bit light compared to many of our other days, but that's just part of the nature of trading. So now the important part is we come up here to these 2 lines, this one and this one. This is where we enter our anticipated forecast for performance for the remaining 12-month period. So we started this on July 6th of 2020. We want to see what our potential income is as we close out a 12-month period. Well, our actual average on positive days, days where we won, is 35.3. I have it forecast at 36.2. I want my forecast to be as reasonably accurate as possible, so I am going to adjust my future forecast to 35.3. This is a number that could possibly change on a daily basis. It just depends on how you're performing. You're going to have some strong days, you're going to have some weak days, and then you're going to have some losing days. And regarding losing days, we plan in the forecast for 1 day a week to be a losing day. So 1 day every 5 days, on an average is planned to be a losing day. Our average losses are 15.4 points. So that's the average of all of our losing days. So nothing has changed in our average, so I'm going to leave that alone. So now we know that our run rate is averaging 35.3 points a day on our winning days, and we're averaging 15.4 points on our losing days. We've got our future forecast based exactly on those numbers. So we have what I consider to be an accurate forecast, a reasonably accurate forecast of what we can project for 12 months. So now you have to take a look at the total number of contracts that you want to trade. Contracts that you're trading are determined by two factors. One is the current balance of your account. We started with $5,000, but the current balance of your account times 10%. So we want to limit the number of contracts we trade to no more than 10% of the value of the account. Now that is something you can change. You can set it at 5%, you can set it at 25, 30, 50%, whatever you want. 10% is something I consider to be quite reasonable and conservative. So each contract at the broker that we trade at, Infinity Futures, requires $500 a margin. So that's $500 a margin per contract. So if I am going to trade 3 contracts, I need $1,500 a margin. The only way the trading plan will allow me to trade 3 contracts is if I have at least $15,000 in the account, because 10% of 15,000 is 1,500. So I can set this number as a maximum number of contracts at whatever I want. The first governor in terms of number of contracts traded is 10% of the balance, so that I have margin allocated based on no more than 10% of the balance of the account. The second governor is you can arbitrarily limit it to whatever you choose. In this example, I'm limiting it to 3 contracts, but you know what? I could put it at 5 contracts. I could put it at 10 contracts. Whatever I choose, it's going to be limited first by no more than 10% of the balance of the account, and second by what my maximum number of contracts is. So I'm going to leave it at 3. Based on the current run rate, which is all of the actual performance of our trading, and then a future forecast based on the same actual run rates, and limited to no more than 3 contracts, even though that may be considerably less than 10% of the balance of the account. That gives me a projected income of possibly $393,250. So that's a very reasonable income forecast, I think, considering we start with $5,000. And this is why it's so important at the end of every day that you plug in your actual performance numbers. You see where your performance is relative to your overall run rate, and then you project out the future based on that run rate so that you have a realistic forecast. Okay, so the second category that we track is trading from 9:30 to noon, all signals. So there's 4 primary signals. And in that case, so we lost 5 points today. So if we lose 5 points times $20 a point, that means we lose $100, and we're trading 3 contracts. The trading plan has scaled us up to 3 contracts. So we have a loss of $300 today. And we traded 10 trades. There were 10 trades. It's a little tough today to get some traction. We had a couple of maximum stop outs, but you know, minus $300 isn't that horrible. So we had 10 trades, 3 contracts per trade, so we have 30 contracts. So now we come back over here and we see that our net is actually a negative $420. Okay, so then we're going to go do the same thing up here. We'll take a look at what our actual run rate is for positive days, and it's 27.8, and our forecast is based on 27.8, and our negative days, we actually just added a negative day, is averaging 14.54, so about 14.5 points a day. We're actually forecasting at 15.6, so I'm going to decrease that down to 14.56, and sorry, 14. minus 14.54, and now I'm right in line with my actual. So I've adjusted my forecast to be in line with actual. Same program here. I'm capping out at 3 contracts. This is to show you an example on this, how you limit your contracts. You might be very conservative. You want to limit your contracts to 2. You might be interested in increasing your contracts to 10. It's only going to get to whatever number you set in there as long as it is no more than 10% of the balance of your account. So that gives us a projected income of $293,365. So pretty happy with that. One thing I wanted to share with you today is I mentioned this earlier in the room. So I did a little work in the last few days in understanding of all the categories I track. I track, you know, from 3 a.m., from 7 a.m., from 9 a.m., from 9:30 a.m., and then I'm tracking within the all signals category. Well, what if you only took momentum trades? What if you took only trend bias trades? And what if you took trend bias and continuation trades? Anyway, so there's a lot of different categories, and you've got a wide range of performance, average performance in terms of points, from a very high 119 point average to, I think the low is 9.8 points per day. Now, remember, that's $20 a point. But there's other factors in here that I want to consider besides just the average number of points. And I'll pick an example here. Here's an example of I could get 74 points a day trading trend bias and continuation signals only, starting at 3 a.m. and holding for the full cycle. First of all, I don't want to start at 3 a.m. And second thing is, if I look at the win-loss ratio, it's less than 38%. Yeah, there's a good point production, but I am just, you know, churning through a lot of losing trades, and that has a weight, an emotional weight on any trader, no matter what your experience is. So it got me to thinking that what I wanted to do is to compare the number of negative days, because we have losing days, but I want to compare the number of negative days to the average performance in terms of points, and then I also want to take a look at the win-loss ratio. So I was doing this manually, and Erin, who is just so outstanding at putting some simple automation into whatever spreadsheet I'm working with, she put this all together and automated it today. So now going forward, we'll be able to see what the ranking is. So the ranking is very simply this. We're looking primarily at the, we're stack ranking all of the categories other than categories that start at 3 a.m. So I'm not interested in considering the 3 a.m. That's for future auto trading type opportunities, okay? So we're stack ranking. What's the lowest negative day? You know, what's the second lowest negative day? And so in this particular category, out of 51 days that we've tracked, so that's over 10 weeks, we have only 2 losing days, okay? Then we took a look at, well, what's the point production, the average point production, stack ranking from highest to lowest. And then we took a look at the win-loss ratio, stack ranking from highest to lowest. And then what I simply did is I just added up the negative days, the point production, and the win-loss ratio, and give it an assigned value. So the idea here is that you want that value to be the lowest value possible. I mean, ideally, you'd love to have a category where it ranks number 1 in all 3 categories. It's probably not practical, but you know, that's maybe something that we see develop down the road. And then what I'm adding to the worksheet here is a ranking based on these total points. So let me kind of summarize that for you here. This category right here, the all signals category, trading from 7 a.m. to 4 p.m., is the best, the most optimum category in this in this form of analysis. Okay, so that's the most optimum category doing this type of analysis, and the reason is because it has the lowest number of losing days. Now, it did have a pretty healthy losing day. We lost 85.25 points on a single day. But let me just tell you, with a little history and a little experience with this, I could work my way through an 85-point losing day because I have some knowledge that, well, I only have 2 losing days. And by the way, the other losing day was minus 1.35 points, 1.75. So, we had one big day that we lost. That's a huge factor in my opinion. And then within each day, the win-loss ratio is a factor also. I want to be able to feel confident in what I'm doing. I want you to feel confident in what you're doing throughout the day. So that category of the 7 a.m. to 4 p.m. trading all signals happens to rank third. Now there's another category that ranks better than that in terms of win-loss ratio, but the point production is 26 points versus 82 points. Now, maybe you want to trade that category. It's one that we track. It's only 9:30 to noon instead of 7 to 4. So that would be a factor for you in deciding what you want to do. There's another category here that has a better win-loss ratio. It's the number 2 category. And this is trading from 9 to 11:30. And you only have 25 points of production, but you have a really strong win-loss ratio, but you've got 10 out of your 50 trading days, 51 trading days that are losing days. So the bottom line here is I'm going to continue to evaluate this. I'm going to share this with you periodically. I see the optimum performing category being the all signals 7 to 4. Now maybe you don't want to start at 7, and I completely understand that. But even if I were to change that to say a 9:30 start time, so 9:30 to 4 is still the number 1 ranking category. And by manipulating the start and end times, I can see what all of the factors are. Now in that category, we went from 2 negative days to 3, and the win-loss ratio is still ranked third. Points are number 2 now because they fall behind other categories down here. But still, in terms of the overall score, you want the lowest possible score you can get to identify your optimum trading category. Now, I also want to say that that doesn't necessarily mean that that's what you want to trade. You may not want to trade that category, but this does help you understand where each category ranks amongst the others. So we're tracking this category, the 9:30 to noon, and we see that that actually ranks third. It's tied for third with the category right above it. And that's one of the categories that we're tracking. The category that is ranked number 2 is the second category that we're tracking on our personal trading plan at the end of every day. It's taking the trend bias trades and the consensus and the continuation signals from 7 to 4. So what this does for us is it gives us a tremendous amount of flexibility to evaluate what we would really want to trade. And I was pretty excited about it, and I'm so grateful that Aaron very quickly automated it so that as we continue to add real trades every day, that we will see these numbers change, and we'll be able to see whether or not the all signals from 7 to 4 remains kind of our number 1 ranking, or whether there's something else. What I think is going to happen is we're going to probably have 2 to 3 categories that we're going to constantly see maybe shifting around within that ranking of the best, the number 1, the second, and the third. But we'll see. This is brand new way to evaluate this. The good news is we have all the data. We're tracking the data every day. We plug in the trades every day, and we'll be able to identify where the optimum opportunity is. One of the things that motivated me to do this is I get questions, especially from newer traders, if I'm a little overwhelmed, where do I start? Well, frankly, if you want to kind of lighten your load a little bit, um, you should focus on trend bias and continuation trades, because that's a very focused area. You can forget about consensus, you can forget about momentum, um, and you can set that aside for right now. It doesn't rank as high as the all signals from 7 to 4, but it is the second best performing in terms of optimization in all of these factors. So that's what I was kind of excited about, and I think it points very strongly to an opportunity, especially for those of you who are very active traders throughout the day. I mean, 7 to 4 all signals is the best performing category we have, and you know, it's number one in points. It's number one in terms of negative days. That by itself really got my attention, that only 2 losing days out of a 51-day period. Yeah, you have the win-loss ratio is in 3rd place, but now we're kind of splitting hairs, because you're splitting hairs between 72.8 versus 75.4 or 75.8. I mean, they're so close. That's why I was super excited about this particular category. So that's what I wanted to share with you. And I hope that you are as enthused as I am about that. All these other categories down here that are listed as researching, we're still digging into those a little bit, understanding where they fit into the whole equation. But eventually, as long as we feel like we have the right data, we will incorporate that into this whole evaluation. So thank you very much for being here. And I appreciate your attention to trading, appreciate you trading along with us, appreciate you giving us the opportunity, along with New Cycle Trading and Analytics, to provide tools and education and support for your trading. Have a great evening, everybody.